And we're back.
Good morning, sir. It's Monday.
Monday morning.
We're ready to go.
Everybody's happy. Everything's rallying.
Everything is it's good again. It's all good again.
It is pretty nuts. I mean, I'd love to hear about your weekend and everything that's going on. But it is pretty nuts that it feels like we're in, I guess this is how it always goes, right? Whenever like VIX gets to like 20, 25, close to 30, whatever, and it's like, oh, the sky's falling, we're in a recession, like crypto winter. I've heard so many people, crypto winter. And a lot of those cryptos are pretty beat up.
The crypto winter doesn't pay, because I was in a pool with you and I had the winter dragon, and you still disqualified
There you go.
me.
Yeah, the Game of Thrones winter.
Yes.
Yeah, didn't help you.
That didn't work.
But you look up and it's like Bitcoin is what, 88K. Nasdaq is off its highs, but it's not down considerably, especially when you think about last year's gains. And you're also looking at a metals market that is, when you talk about Teflon, the most Teflon thing.
Copper, $5 and almost 20 cents, which is multi-year highs right now.
It's unbelievable.
Last time we got there, we went to 520, back below $4 in under like 2 weeks. So it doesn't feel like that this time around. It never does when you get up there.
Sure. But I guess this is all to say that like these like mini crash, I don't even know what to call them, are always kind of rounding errors off of all-time highs or extremes.
Right.
And I don't know if we're going back to all-time highs in all of these markets. Obviously, gold is already at an all-time high. But it is just pretty wild to see 3 to 4 weeks of this turbulence, VIX being up. And I just had one of those things. You and I are so close to all this stuff that we're constantly looking at net changes.
Right.
You know, like where are SPUs up or down 20, 30, 40, 50? You know, what is, Eurodollar's down 100, whatever. But a lot of these numbers, when you look at the actual prices, are not that far off of those upside extremes when you're talking about risk on. So markets that are far, and I'm sure we'll talk about them, from those upside extremes that aren't playing as well are the commodity currencies that are trying to fight back here to start today. But are you surprised to see all of the upside to start the week?
Well, in the equity side, Friday was triple witching, and they had one of those. They came for everything they beat up: Meta, Nvidia, Google, Palantir, one of Frank's favorites. I think he bought it at 30 cents, and he still got it. So, and he takes great joy in showing
30 cents.
his where he's long. On the chart, you can on the tasty chart.
When we have a rough like crypto day or whatever,
you're always so proud of that.
I'm long. It's my happy place.
Yes.
You know, like Happy Gilmore, where he's like,
Yeah.
I got to get to my happy place, and it's like scantily clad women and like pitchers of beer. For me, it's like, all right, let me pull up the long-term chart of Palantir, and I can see my longs from $14. Okay, 85. That's still pretty good.
But they really came in, and they rallied the close. And you know, there's a lot of. Because we had kind of a funky 8:30 expiration of the morning, Friday, which is when futures expire. There's usually a bid bias to it, and there was just tons of selling going into it, really weird. And the bid came at the end of the day, and they rally them up, and sometimes it's an interesting place. You throw a few shorts out. Sunday night, they opened 10 handles lower, 15 handles lower. And they rallied them another 10 handles Friday after the cash close, and I'm like, this is not going to be one of those Sundays, because everybody who's short is going to have to buy back. And I think they opened up SPUs 25 handles higher, NASDAQ 100 higher, spent a little bit of time until all the Asia players settled, and then went right to town all the way to new highs. With that, the bid came back in sterling, the bid came back in euro.
Yeah.
U.S. rates turned lower. So bonds and notes lower, and what do you think would be lower from that?
Bonds and rates lower, I would imagine.
Bonds and notes are lower, yields are higher.
Gotcha.
What currency is the outlier here?
What, yen, I would imagine.
Absolutely.
Yeah.
And we're seeing dollar yen higher.
Let's take a look.
Yen against it. So this really is tracking U.S. rates.
Yeah,
right
man,
now.
right back to 150. I mean, talk about another market that's like, man, dollar's getting smashed the last couple of weeks.
Except
150 still.
Yeah, and I mean, is this correlation perfect? Obviously not. I think it's running. Glenn ran some numbers around 55%. Certainly worth looking at. You can't lean on the fact that if bonds trade down to, they're still wrapped around 117, 116. They're in the middle of a relatively kind of sloppy range. But I would imagine if we see yields on the long end, and it seems to be the long end that's driving it, resume their march up closer to 4.5% and 5%. Well, if the 30s are at 4.5%, closer to 5%, we'll see dollar yen continue to get a bit of a bid here.
It's an interesting one for sure, especially coming off of, we've got all the price action from last week's Fed, and you see the dollar, it got hit pretty hard and has been able to recapture all of this, like we say, back to that magnet of 150. I mean, from here looking forward, what does this look like to you? Do you think 155 is more likely or less likely than 145? Because it's crazy when you put in more data how high we are relative to the last several years, last 2 decades of data. But man, it seems like we're just spending so much more time above 150 than below this 150 price in this dollar yen piece. And if equities are going to, if that's all she wrote for the U.S. equity story, and of course this is one
to the downside.
Yeah. If that's all she wrote to the downside for that equity story, is this yen going to become a little bit of a pig, so to speak, again?
You know what? I honestly think that U.S. rates are not going to be tearing higher to 5%. I think we're going to be sitting in bonds right now between 115 and 118. It's going to be relatively uninteresting. Notes, the same thing. Notes wrapped right around the 200-day moving average. So if this is what this is doing is, if you, from the last year and a half, this is the one that's moved more than anything else on a percentage basis.
Yeah.
More so than Kiwi down at 63 cents. More, I mean, Aussie at 63 cents or Kiwi. So I think if we get bonds to test that bottom end of that range, maybe you get the ability to sell 151s or 152s here, or even start chilling a few out at 150. I think this is an interesting level.
Interesting that you're looking at it from that point of view.
And not just from, I'm just not saying the bond's got to do this for me to do that, but I'm thinking this is acting very disconnected from the dollar story, which is playing through varying degrees of strength in euro, sterling, Aussie, and Kiwi. Well, the tariff thing seems to be less of a wild card here this April 2nd. Now the buzz over the weekend is they're going to be different. And they're going to, this is going to be, again, all he's trying to do is extricate himself out of a difficult situation.
Whatever it is, it's diminishing returns on that front, and diminishing volatility returns on that front, I would say for sure. But what is interesting here is, I mean, I wouldn't have thought about this waking up this morning or looking at markets last night. But if you look at the last couple of weeks here, it looks like dollar is stronger than it is weak in terms of the trade that we're seeing. And I think it's because, you know, we've seen so many of these bids since the start of the year get sold into, these bounces get sold into for this U.S. dollar across a bunch of different currencies. And we'll take a look at a few others in just a second. But holding on this, you know, you would have thought that this FOMC move last week would have been like, okay, like here was the bounce off of 147. They bounced it back to 150. Good for you. And now they're going to take it back down to 145. That's going to be the next price point here in a diminishing dollar story in 2025. But I mean, I'll be damned if this isn't the strongest that we've seen this dollar versus the yen this year, in that it's put together a bounce from 147 or 146 half, whatever you want to say, up to close to 150, or pretty much a rounding error off of 150. And they've tried to take it down now a couple times in the last 2 weeks. This will be a really interesting week to see if the dollar strength continues here, because where it's been where it's actually not diminished at all but it's losing a little ground this morning. But I don't know how many times we have to see this story, Pete, where the start of the week is commodity currency strength. They try to get to a new price, a new range. I mean, I think this was Monday of last week, wasn't it? Yeah, we were looking at this together, and we were trading close to 64 cents. And I was talking to you about how, oh man, it'll be interesting if Aussie can get through 64. That's the high for 2025. Can they make a push into a new area? Absolutely didn't do that throughout the rest of last week. They're trying to do the same thing, but is this a kind of a diminishing returns thing as well, where these commodity currency bounces are getting weaker and weaker, and they're getting sold into heavier and heavier? I mean, now it's like, can Aussie get above 63 cents? Like,
absolutely. And when we look at that, and don't go there quite yet.
Sure.
Frankie, when we look at the euro, we saw that rally, and granted, we had that huge couple of days, but then it started to, we get a little ebb and flow. And what we saw was when the highs were put in, they were always higher highs, and the pullbacks were higher lows. So I'm not a great technician, but just in terms of market structure, there you're seeing new highs put in that exceed the previous highs. When the pullback comes, they don't get anywhere near the previous lows. Here's one where it can't quite build. We get highs at the same level, 64 cents, 63.80. I mean, that's a rounding error. We haven't been able to get it. So in terms of this one, you would think, okay, well, Pete, you got a 100-point pullback here, 100-pip pullback. That's a nice pullback if you want to be long. Sure. But tape action-wise, I would have loved to see us get to 64.5 or 64.75 and be buying the 64s on the pullback, because that would have shown me that structure of, okay, the market is challenging new levels. And of course, we know it doesn't go one way forever.
Sure.
Now, 108.5 euro seemed rich. We knew it wasn't going to, we didn't know. It looked like a good spot.
Yeah.
But the market tends to inflict more pain, as it did up to 109.5. We're not seeing that here. So is this going to be timed release? In other words, sometimes different currency pairs take a little bit longer to build energy to move. Right now, it seems like it's consolidating a little bit. And I don't see the same energy. I think you've got to go where the interest is. Now, if you want to start to, and again, 62 cent Aussie is cheap.
For
Kiwi
sure.
is cheap. If you want
Can't
to
argue
start
with that.
to build a little bit of interest,
Sure.
build some interest, but build it small. Go to where the market is giving you the outsized elastic days.
And we'll get to that piece in a second. But just to put a bow on this, you want to talk about market structure. You want to talk about, again, we're not technical analysts or whatever. We do a lot more probabilistic modeling, look at correlations. And what the correlations are telling you here, Pete, is gold at all-time highs.
Doesn't help.
China, way off of their lows, way off of their lows in terms of an equity market. None of those things are helping. And this is one of those pieces where it's like, of course, in the grand scheme of things, if we were to look at, all the data points, and let's take a look at all the data points, and you were to say, okay, let's...
See that, now, you look at the monthly, and I love this platform.
Sure.
Because you can so easily bring up that. And
a lot of data.
Trade. One of the things traders do, and I'm a victim of this too, is I use a lot of 5-minute charts because I'm in and out a lot. Take time during the day to change your perspectives.
Yeah.
Go out to an hour. Go out to a day. Once in a while, look at the monthly. Look at the weekly. It will help you get a little bit of context and not get so ground in every 20-pip move as to making or breaking it. This looks sick.
And my point being here that, like, okay, if you want to make a case for Forex markets a lot of times being mean reverting in the long run and whatever, and let's say that the mean, the average price in this Aussie
75 cents.
Is 75 to 80 cents. We'll even say be relatively conservative, 75 cents. Now, I'm not saying that this market has to get back to 75 cents at some point in the future, but let's just say that's the long-term average, and this market is theoretically mean reverting. And you might say, well, Frank, then I'd much rather own this at 63 cents than, say, 68 cents. But in a market like this, Pete, wouldn't you rather see this market last week getting up to 68 cents, 69 cents, and then backing off to 68 cents and being long there.
The higher highs, the lower lows.
As
Absolutely.
opposed to a market that can't climb above 64 cents, and now it's bouncing back to 63, and it's like, well, yeah, this is cheaper than the euro dollar piece, which is where I'm sure you're trying to get to here. It's cheaper relatively speaking, but how much more confidence do you have in the euro dollar piece, the euro piece versus that Aussie piece? Right now, the market would tell you they're a lot more confident in it.
Absolutely. And the thing with the Aussie trade too is pot odds wise, and this is classic Tom.
Sure.
Adding some 63 cents and buying some when the tapeback's more constructive. It's like having your Pelletier at 28 cents.
You got to sit through a lot of. It's the same with the long China any market that's beat up. You got to sit through a lot of messed up price action.
20 years ago, when the markets were much less liquid, you would have these blow off tops and bottoms, and it would punch a low or punch a high, and then you'd see a direct change of trend take place the next week. Unfold. Markets don't do that anymore. They exhaust people trying to buy that dip in Aussie. They exhaust them. It just doesn't give you the action you like. But if you're willing to start and put on a quarter of your unit size and give yourself in effect, then if you're taking that average daily range, which was 32 pips, I think is what we had
around there. I think. Yeah.
If you're doing a quarter of it, you're going to give yourself 100 pips on that trade because that's your loss tolerance. And you build that. There's nothing wrong in buying, if you're going to accumulate a position, buying some, waiting through it, and when the tape action starts, buying stuff higher than where you had bought your original tranche, I know it's, for longer term trend trading, you're going to have to get comfortable with that idea of letting the confirmations come through and being able to add to those pieces.
Well, and I'm glad you bring up the longer term piece because it's all about timing. And I guess my point here being, yes, if you like the pot odds and you're willing to sit through in the Chinese equity story, for example, months to years of it moving sideways or against you or whatever, then this is probably the best major. If you were going to buy any currency against the dollar, this is probably the best for that, given that it's pretty much the weakest. But if you're looking at trading, like day trading or swing trading, this one is not giving you, and you're looking for upside in a currency against the dollar, this one is just not giving you the trade. No worries. As opposed to this euro-dollar piece, and I'm interested to get your point of view here, because this is one.
What's the carry in the Aussie right now?
It's going to be, I think it's actually relatively even on both sides because their rates. Yeah, it's pretty flat. So you're not necessarily getting paid or getting killed long or short on one side or the other, as opposed to, because I see your point. Like if you were going to try to make the same story in a dollar yen piece and you were like, oh, like let's say the yen is super beat up, and it's like, oh, I'm just going to build my long yen position and hold it forever. That's going to be,
you're paying
right now, and these are indicative prices, 2 to 2.5 pips per night, as opposed to the Aussie versus dollar piece, less than that, and it's a pretty even bet on both sides. But with this euro dollar piece, I did want to get here before we got out, because this has been the strong currency the last month or so. Very different chart than everything else that we just looked at. Yen giving up a little bit of the steam that it had to start the year. Aussie and the other commodity currencies trying to gain any steam, not really able to. Eurodollar recently came into some steam, if you'll bear with me with that metaphor. It gave up a really interesting move last week to get up to 109. What did we get up to? 109 half. Gave back some ground on Tuesday.
150 pips.
And then following, the Fed here gave back a bunch. They bounced it, remember, after that Fed meeting, and then gave up everything back under 108. Now, right there at 108.40, what's the vibe in this Eurodollar market? Like I say, the strongest vibe I would say across the major pairs right now, the last couple of weeks. But I mean, it's off of 109.
Yeah, absolutely. This has established a new range.
Mm-hmm.
So everyone who had toiled between 106 and 102 is not everybody is necessarily out.
Mm-hmm.
So, and that's what we're seeing is pullbacks are getting bought into. Now, if they continue to get bought into, in other words, if 108, 107.80 holds, chances are we visit 110, which, remember, I've traded euro at 92 cents and 140 and 138, I think was the highest.
Yeah, you want to talk about historical prices. There you go. That's 160
we went
to
up
the
to
upside.
160, that's right.
In 2008, and then of course we spent plenty of time below parity in the early aughts, and then recently, you know, we spent a month or two below parity.
And I think that just taking a look at that, and let's go back to the daily.
Sure.
Then. Now you feel like, okay, I'm not buying like this perverse high. Yes, the market's rally 400 point. Markets forget. They're perfectly
memoryless. Yeah,
they're memoryless. They're perfectly priced. So what I like about this is structure-wise, this sets up nicely. If you're going to buy something in this range between 108 and 108.40 here, you kind of know if it does roll over.
If it gets below 107.80,
70, they're probably going to test it a little bit lower.
Tough, yeah.
Yeah, and maybe the next build point is 107.25.
Sure.
That's fine. So now I've already identified a reasonable level to get in, which is a 130-point pullback. I've identified my downside of what I'm willing to risk, which is about a day and a half's range on a little more than a day's range right now because we're out. And what am I looking for? The 110 print.
Yeah.
2-to-1 risk. Setups like that, again, everybody can look at it differently, but if you can put together a scenario like that and then stick to it, you've got a pretty good game plan for something that is really pretty elastic. If it gets back up to 109.5, would I be a seller? For me, it would depend on what got it there.
It'd be interesting.
If it got there on a knucklehead PMI print or a CPI print, or I think we've got some of those things coming out this week, yeah, I might fade it. But if it grinds up there again, it's just confirmation that maybe we're in a new range.
To your point, this feels like the healthiest market, the most two-sided market that like
Sterling does too.
Yeah.
And you know, I would almost want to let's go to Euro Sterling.
Sure.
Just to take a quick peek before we go out. So, and you've seen Euro Sterling actually roll over a little bit more here because why was this? Well, the Euro gave ground. Sterling didn't give back so much ground.
This is a nice move back and forth from 82.5 all the way up to 84.25-ish, and then coming back pretty significantly in a lower volatility pair than the ones that we've just been talking about.
So if Euro and Sterling are both moving and you want to stick in the dollar pairs, you can kind of get a sense. Looking at this, you can run the math. Well, which is outperformed in the short run? Which is the strongest one? This chart tells you exactly which is the strongest one on a day-by-day basis. And right now, the Euro strength, which we saw play through there, gave back some ground. Is there a trade there? Not one I'm seeing right now. I'd rather stick in the outrights or the dollar pairs.
Yeah.
But there's some interesting takeaways from that cross.
Yeah, talk about a rounding error from recent highs. I mean, they're not 50 points off of 130 here in this pound, but we'll cover more of it later on in the week. Pete, thanks for spending some time with me, my friend, and everybody out there. Get ready for Tom, Tony, and Vanetta coming up next. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insight